Welcome to Friday Takeaway. This week, we take a look at two fintech-related companies, upstart Orion IXL and more established GHL Systems. But before that, we get into China, which released a whole bunch of economic data midweek that beat a lot of expectations, most significantly GDP. So Beijing said its economy grew by 6.4% year-on-year for the first quarter of the year. Analyst Poor Boy Reuters had been expecting 6.3%. Now, other figures. Industrial production for March jumped 8.5%, blowing past the 5.9% street estimates. March retail grew 8.7%, estimate was 8.4%. Now, investors have been watching the health of the world's second largest economy, embroiled, as it were, in this trade war with the US. According to CNBC, the better numbers were attributed to support measures put in by Beijing to prop up the economy, and the authorities are expected to introduce more if this trade tussle doesn't get resolved. Back at home, Bursa saw a sharp drop-off midweek on fears that Malaysian bonds will be excluded from the FTSE World Government Index after local government bonds were placed on a watch list for 6 months. It was a very knee-jerk reaction. There was heavy selling on the local bond market, mostly by foreigners. The ringgit reacted badly as well to the news, its weakness compounded by this earlier development that Norges Bank would actually slash emerging market bonds. Now, RHB thought that the selling is actually a bit overdone and mostly done in panic, and that the medium-term outlook for Malaysian bonds actually remains fairly intact. This morning, the FBM KLCI was a little better after closing at a low yesterday, but still very rough road ahead. Finally, we have to talk about ex-PM Datuk Sri Najib Razak's ongoing SRC trial, and this week, Bank Negara's officers were in the limelight following the raids on AmBank for accounts linked to Najib. So one of the highlights was that Najib paid 2.3 million ringgit to UMNO UPCO in 2014 to 15, according to checks records. The trial continues April 22nd. This week, we take a look at some of the listed fintech players, one relative newbie and the other that seems to be in fortifying itself mode. So, out the gate is Orion IXL, which saw some movement in its share price on the news that it is looking to turn itself around by diversifying into fintech. But of course, easier said than done. Then we turn our attention to GHL Systems, not purely fintech, which has bagged a few contracts and signed some deals both home and abroad. But has all the good news been priced in? Let's match them up. Orion originally was a provider of computerized maintenance management system services, but it had been losing money over that particular business over the past couple of years. Then in 2017, a new management team took over, and now the group has pivoted into fintech, specializing in financial transaction management systems using big data, AI, and blockchain. So interest in the stock picked up after CGS-CIMB initiated coverage on Orion, calling it a fintech microgiant, rating it ADD, and on the back of earnings growth potential from its new fintech business. The big break came in October last year when its unit entered into agreement with Angkasa, the country's national co-op movement, to provide fintech end-to-end loan application and approval through a platform called, and bear with me, My Angkasa Az-Zahara, which went live in January this year. According to the research house, actually, the country's credit co-op market is set to see significant growth. Expects 1 billion ringgit in loans to be approved by the platform in FY20, 3 billion in FY21. And on top of that, Orion also recently signed a couple of MOUs with SME Bank here to develop a financial processing platform and Indonesia's PT Kirana to provide tech for a loan management system. Simply put, they could just mess it up. CGS-CIMB warns that poor execution could derail the train, and Orion is still new actually to the fintech space and the business not profitable yet. The Angkasa platform still very new, and financial proof would only show up in the next 1 to 2 quarters. And the company is still loss-making, and current earnings are all tied to its old computer management services biz, which is concluding some of its contracts and expected to remain flat unless Orion gets some new ones. CGS-CIMB is the only one that covers it, and the target price is 33 cents, quite lofty. It says the company is under-researched and microloans market has the potential to be huge because it's still in its infancy now, with the tech being the big leveler. The share price has already moved and has been hovering around 18 cents over the past couple of days, but still far off from the research house's target price. GHL is a payment service provider with services that encompass physical, internet and mobile payments. It has presence in quite a number of countries including Malaysia, Thailand, Cambodia, but to name a few, and according to GHL, it has processed over 10 billion in transaction value per annum. A month ago, GHL managed to land a 25 million contract to develop and implement the government's RON 95 petrol subsidy program through an open tender process. Why? BIMB, which called it a pleasant surprise, expects the implementation to take effect in the second half of 2019 and says this provides structural earnings growth for its transaction payment acquisition or TPA business. Then in Feb, it signed an e-payments deal with Bank Negara Indonesia, the country's fourth largest commercial bank, and Indonesia's vast size and low penetration of e-payments means enormous potential. Competition remains a concern and how it will impact profit margins, which is why GHL says it needs to remain nimble. BIMB points out again that the good thing about growing that TPA business, in as much that it serves as a buffer against the declining e-payments business. The two most recent research houses that cover GHL are RHB, which is neutral with a target price of RM1.72, while BIMB actually upgraded its call to buy after that RON95 deal with a target price of RM2 flat. So over the past year, the stock has been trading at an average of RM1.60, but it's not anywhere near since its high of RM1.81 back in October.